Hello and welcome to this week's weekly Inner Masterclass, Inner Circle. A fair bit going on last week in terms of news events and stuff, and obviously earnings seasons, but in terms of price action, it's pretty muted really. I'm going to start with indexes. So this is the Nasdaq, and the key thing really was we held the weekly support here at 58.55. Actually did it 2 days running, come down to it twice, so it remains that there is no resistance. Looking at the E-mini, similar story for the E-mini, a minor reversal. We've actually been getting quite a lot of dojis though, which for some people in the market they'll start trying to top pick, but there's nothing really on the horizon for us at the moment. Same for the Dow. In fact, for the Dow, supports are a considerable distance away as it continues to just edge higher. So supports are so far away, talking hundreds of points, so nothing in the way there at the moment. Different story in Europe completely. Generally, if the euro dollar goes up, that's not good for European stocks, and we've seen the DAX under pressure really from the moment that the euro started rallying in earnest. Pivotal points, this 12,303 took it out. We had what's called a tri-star doji, so 3 dojis. That encourages bottom pickers. If I was to put the slow stochastic on there, would not surprise me at all if that was, I modify it, as that was also looking to start to encourage bottom pickers as well. So just put it on the global setting of 1033. It's still edging down, but a cross up will encourage them. For us, that 12,303 point is the critical resistance. We failed there on Thursday. The target is 11,915, so a fair way down, still another 250, 300 points. If we do the Euro stocks, much more subdued, pretty boring, really not too much to say about that. That monthly level at 33.17 is what matters. And for the FTSE, again, pretty boring. We've been hovering around that weekly black line either side of it for some time now, so there's not much to say there. If we move on to currencies, surprise, surprise, the Fed was dovish midweek, which is, they don't want to do anything that's going to upset the stock market. We had some perceived hawkish comments a few weeks ago from Draghi and Yellen, which caused one of those one-day collapses that then gets recovered. So the theory is that interest rate rises are back out to the end of the year, which was what made the dollar fall on the Wednesday. So we had a minor buy signal, pops, but not at support. We had another one on Thursday, but again it's not at support. This key level here is 92.34, so really, really interested in there because the dollar is overextended on the downside. So that's our focus if we get down there. If we do the euro, conversely, of course, the euro has gone up. The interesting thing was it really didn't take much notice of this monthly level at 116.17. We sort of edged above it, and then it's been support. So the low was 116.13, low this day at 116.26. So no resistance. 16.13 is a pretty important point. It's only just over 100 points below. There is no targets on the spot, so we need to go to the futures, and there is a level a lot higher up, 120.26, so a long way away there. If we do a bit on range relativity, just to see, we are a little bit early in the quarter to sort of start looking at any major targets, but if I just go back to the spot, We have the semi-annual target at 118.52, so about another 120 higher. We've already taken out the quarterly, and we're well above the annual. Yeah. So at some point, if we continue higher, we'd be looking for what we call a slingshot move. So the market gets overextended, and then we slingshot back the other way. An example of that would be what happened in T-bonds a couple of months ago. Let's go to the pound. Buffeted as always by the eternal boredom of Brexit, edged higher through the week, pretty quiet, but there is no resistance. It can actually rally a long way before it comes into anything meaningful. If I do the futures, we get a few more levels there because range can be based on volume as well, and that highlights the same point. Absolutely nothing until actually I think the Brexit high on 51.12, so plenty of room there. Onto the Aussie. Broke up the week before, suddenly again somewhat hawkish central bank statement is what it got it going. That was the day there. They then sort of refuted it and it came back a little bit, but it's clear to see that 77.79 is the important point. There is no resistance for a long time. Only a minor daily level has moved to resistance, so the trend is definitely up there. Let's do Kiwi. Kiwi also moving higher, no resistance. Yen's interesting because we've come down. I just spread that out a little bit. We've come down from a stepping ending process there, moved all the way down, and we're pretty close to 110.23. So the low's been 110.31 today, on Monday. That's a pretty important point. So go a little bit lower and then reverse, then we'll be interested in looking for a buy signal. If I check the futures, type in the code right. Then very nicely we have a similar level in terms of timing at 91, let's just get it right, 91.18. So big focus there for the yen this week. Final currency, dollar CAD, we took a buy signal on it on the Fed, and it's quite important. I had a few questions this week about how aggressive you can be, and do you wait for a daily signal, etc., etc. And what I was interested in is we had the Fed, we came into the number, and then we reversed. So we made a low just below that monthly level. But the thing that I was really focused on was a little bit like the yen. You've got the spot and the futures, and they're pretty close, but they're not exactly synced up. And what we had was on the futures, I had a resistance point at 80.60, and we just went to 62. So as soon as it did that, reversed about 10-15 ticks, that's when I put the position on. Now the following day it looked like it had developed pretty well. If I go back to the spot, and that level at 80.60 is still valid, but then there was only one economic statistic in 10 days on Canadian economy, which was on Friday. It was the GDP numbers. They were a lot stronger than expected, so it's gone back, straight back where it started, and pretty much where I put the position on. So in the interest of prudence, I scratched it. There's a big difference there though between waiting for the daily signal in terms of risk and actually looking very, very short term when it went there on the Fed, where I was only risking 25 points instead of 150. So there are some big differences there in terms of the volume you can trade and the risk that you're taking. The buy signal on the spot, the dollar CAD, is still just about valid, but we need some more confirmation. Yeah. So watching very closely. What I'd ideally like to see is the futures go back up to that 80-60 level and fail, which isn't too far away. Moving on to commodities, gold. Took out the weekly level at 1262, pretty important support, edged higher, really just moving with the dollar, doesn't necessarily have a lot of independent strength. If the dollar keeps on falling down to that key monthly level, then have the opportunity to move up to 1305 to 1307, which is a very, very big resistance. So that zone there is our focus if we get there. Silver, in the short term, it's sort of underperforming a little bit compared to gold. We had all those buy signals underneath the monthly support a few weeks ago, 1727. Crude oil, in contrast, has performed pretty well, and considering quite a lot of bearish news on oil last week, so we had bad news, good action. The prospect of certain governments, certainly UK governments, saying that they want to not have any oil-based cars by 2040. I know it's a long way away, but I'm not sure what they're going to do with all the tax revenue they're going to lose, and I'm not sure what it's going to do to the Middle East if everyone started doing that. But anyway, oil broke up through that weekly level, 47.73, which was where it topped out, went one tick above it previously, 52.41, pretty important point. I'm just going to put the range relativity on there to see where we are. We're already above the quarterly target, annual all the way up at 56.79. I think there's a semi-annual there as well, so the quarterly and the semi-annual were at the same point. I will just make sure. Yes, they were 49.25, so I've taken all of that out. So there's further room for it to rally. Watching that level below, 47.73. Just give you the short-term level. I have to go to my other screen, so you just have to take my word for it. 48.66. So that's where the half-day support is. So about $1.25 lower. Copper's been in the headlines. It's not something that I very often trade. Can be a bit of it in a mind of its own at certain times. The key thing there is we've taken out the monthly resistance at 283.60, came back and held it a couple of times, so the low was 284.10 on Friday, moving higher again. Moving on to stocks, Facebook surged higher on results, opened on the highs, closed back below 3 down on the range deviation pivots, and then recovered a bit on Friday. But as you can see on the chart, still very much in breakout mode, while above 155. Google was the poor relation. Disappointed on their results, gap lower. We're really a little bit trapped though, unless it takes out 915 or 993, then we're basically stuck in the middle of the range. Amazon, again, was deemed to disappoint. One of the things that happens in earnings seasons, especially with the big stocks, is they nearly invariably get ramped ahead of their results. You get pundits and people in the media and television invariably pump this stuff, so it's not a surprise to see the rally ahead. I looked at the results, and like most people, it's a bit like Google. It's very difficult to understand whether the share price goes up or down based on their numbers, really. They don't actually really make any way. They tend to reinvest everything that they make. So gapped higher and then reversed. We've had a UFO and a time continuation. We actually, though, just about closed above that weekly level. But some damage done, but really just going to have to watch it for now. Netflix, also taking over the world. Although again, I don't think it necessarily makes any money somehow. Gapped higher on its results before. Bit of a head for the exit on Friday with a slam dunk. The weekly level is going to move to the top though, so it's the end of this week, so we get a little bit more interested in it then. Finally, Apple. Apple's results are, I think, after hours on Tuesday, if my memory serves me correctly. The monthly's already moved to the top at 156.65. Got a bit of a ramp, and then again everyone headed for the exit briefly on Friday. Just remember that all that happened was the Nasdaq went into that key support, so everyone's panicking, but actually all you're doing is going to an opportunity for sensible money to actually buy the market, even if it's just for the short term. Very interesting, that 156 number on the results, so it's after the close on Tuesday. Finally, on to ETFs. Not a great deal going on them this week. This is the financial sector ETF. We've just gone above the monthly level, but there's 3 or 4 of them, and they've all sort of gone to their resistances and stopped. Interest rates going higher is normally good for banks, and that seems to have come off the agenda, at least for a bit. So watching this sector pretty closely. Biotech. There's 2 main ETFs there, IBB, and as mentioned during the week, we had a double sell but into the weekly support. But now 323.5 is pretty important to us. If we can fail there, if I do, if we go to XBI, the other one, that gave us a signal, not surprisingly, on the same day. Although it did take out the weekly support, so this 80-89 level is pretty important to us. Home builders has been very much loved, dropped from sector 3 to 8 during the week. We topped out to the tick at that monthly level, which is about a month ago. We've been waiting for their results of the home builders for quite a while. They're starting to come through. And we're sort of getting good news, bad action. So if I was to look at DHI, which is the biggest stock in the sector, broke out, and then we had this day here. This was their results. The results were pretty good, but we've had a minor sell signal, and we've taken a short position there, pretty aggressive, I have to say. We've got this monthly support at 34.56. If I go to one of the other big ones, Len, still trapped in sideways. We have popped higher once, but is below the monthly level, and there isn't really much below. Uranium is another area that we've got an exposure to, primarily based on the uranium price itself. Took out the weekly resistance level, extending higher. Resistance is a long way away. Bucking the trend is normally pretty closely correlated to the dollar, and that's not happening at the moment. We have a position in the ETF, URA. A little bit disappointing this week, really. We're long from down here, so not really moving with the price as such. But nothing to be overly concerned with the price of uranium, considering continuing to go higher. The other stock that we're looking in that sector is UEC. It's pretty poor on Friday. Not doing a great deal. 146 is that key level. Just a quick update on some of the other positions that some people have. Arex, had it for a while. Really not doing very much at all. Very, very quiet. Just going to check when, because I have a feeling they're coming up pretty soon. Yes. Yes, after hours on Wednesday. So depends on your concept of risk, what you want to do there. The position is a little bit in the money, not a huge amount. The buy signal was back here, so it's about 10% up. Already taken some money off the table from this sell signal here, so I suppose it makes sense to probably carry it through as some profits have already been taken. OSUR is another one. That's also got results Wednesday after hours. This one broke up, gave us a sell, partial profit taking there, and has drifted. This one really isn't very much in the money at all, and we've got weekly resistance moving above. So I would err on the side of caution there and say thank you very much. I'd take some more money off the table. If I was going to keep a position, it would be pretty small, because we really don't want to be taking the crapshoot through numbers. Some other ones that came up in the last week or so, SMRT, Steenmart. I think they're in the grocery trade. No, sorry, it was retail apparel. I knew it was an unloved sector, so they've been slammed recently. Had a very, very heavy short interest. We had the buy signal, which is power play buy, pops buy, and a timing point. So it's just edging higher from 126. I think we're up to, where are we up to? 139. But as you can see, there's no resistance at all, so that one is pretty interesting. Results not till August 16, so we've got some space there for it to move some more. Automotive has been an area that's been unloved. This is O'Reilly. Two signals appeared. That one before was any support, and then we had a power play buy, which gave some aggressive players an opportunity to get involved. Went higher again. Weekly support has moved to the lows, which has opened up space. So that one's looking pretty good. Finally, just going to go on to grains. Obviously weather is all that matters at the moment. Pretty volatile week. Corn is just about sitting at its final support. We failed at the 405 point last week. That's really the critical level for that. Beans, a similar story. It's going to pretty much do the same thing. Again, big reversal down day, but we still held above the monthly support, so a slightly different picture there. We start to hit the critical period for soybeans. Wheat just drifted lower, been pretty disappointing really. It's come all the way back to the original breakout point where that green square is, a little bit in no man's land. Finally, sugar. Took some profit on sugar this week, as it's not really getting a huge amount of benefit from oil. There is an actual correlation there. It is trying to break out of the top. There's some short-term levels just above. We are interested in getting long again and keeping an eye on it. So in conclusion, Tuesday and Wednesday pretty important for results. Apple is there this week. That's really the final big piece of the jigsaw in terms of earnings season. So once that's out of the way, you should get a clearer picture of what indexes are going to do. Okay, thanks very much.